A macroeconomic trader sounds the alarm on potentially some of the more structural changes that are happening in the market. With this quote, he says, DeepSeek is the initial catalyst that's led to this turmoil, not necessarily inflation or tariffs. Now, I'll get to why this is important at the end of the video, but what I like to look at is how does an asset compare to the S&P 500? Is it outperforming? And you can see that when you have these pair charts of Bitcoin and the S&P 500, the largest 500 companies in the US, if Bitcoin is outperforming these 500 companies, you're beating the index. And that's something that you use as a measuring stick for, is this asset worth taking the risk on? And I could just invest very easily in a passive index fund. So I want to get into the story behind why I even came across crypto, why I even came across Bitcoin. It started in 2014 when I first heard about it from a conversation with a friend. I had no interest. I didn't believe that this was even real. I wish I had taken that more seriously, that conversation, but I just never did. Then I came across it in 2020 and I was just, again, thinking this is a cockroach asset. It seems to be constantly in the news headlines as it's about to die, it's going to zero, yet it's actually doing well and it's better than when I last looked at the price. Again, I never took the action to really put a position together, but I read and I understood what it was, and it made sense to me that this is just a ledger, a unit of account, and there's got to be some historical context to this. The next time I came across it was a few years later when I really started to understand why do people agree to using this unit, this fiat currency unit, as a way of transacting, and how can it hold value over time? To truly understand Bitcoin's intrinsic value, it's going to require more than just this video. It's going to really require you to understand the history of money and where money finds value, its salability, its ability to stretch across space, its ability to last the test of time, its ability to be divisible so that it can be used for many transactions. So I want to take you to the island of Yap, historically famous for using these large rhinestones as a way of publicly declaring transactions. These stones were large, they were laborious, and they were very difficult to find. They had to go on boats to neighboring islands where they would extract them. It was a laborious job, it required a lot of work, and then those stones would be then set in the public area of the island where if you were the owner of the stone, you would declare a new owner through the transaction publicly so people were aware of the fact that this transaction has taken place. There was at no point anyone who physically held the stone, who physically had that stone and could carry it around. It was actually very difficult to divide into smaller units. However, the stones were scarce. The scarcity of these stones was allowing them to stand the test of time. The scarcity of these stones was allowing this money to last the test of time and hold its value. Now, a man known as O'Keefe was sailing around this island and he ended up shipwrecked on this island. He saw that they had coconuts and he was able to see that this could be a great product for him to be able to sell to oil producers. He knew that they used these rhinestones as a way of transacting, and he later, through his superior shipping capabilities, he was able to extract the stones from this neighboring island, bring them over to the island of Yap with ease. And that with ease is the main point. The moment that he was able to bring these stones over in abundance with ease was the moment that the stones lost their value, the scarcity of the stones. However, the chieftain of the island was able to see the potential threat of allowing these stones to be easily brought over. He said, anyone that takes the stones from O'Keefe, it will act as an illegal transaction. It will be illegal tender. However, people saw that these stones were the same as the stones that they'd always used, and so they just thought there's no harm, and there's no one that is able to actually see that there's a difference between the stones that we already used and the stones that O'Keefe has supplied. The moment that the majority of people started to accept the stones from O'Keefe was the moment that this currency just fell in terms of its value, and it was no longer used, and this society as a result fell. So you can see that the importance of understanding the history behind how money is actually assessed as valuable. These stones wouldn't have been any precious metal, they wouldn't be nice to look at, they wouldn't be easy to carry. They weren't something that people would desire from an aesthetic point of view, but they had value and they were used to create a monetary system on this island for many, many decades. Anyone who knows what these ridges are for will understand why it's so difficult to trust any central body who has authority over the money supply. So these ridges is called reeding, and they were etched into the outside of these coins so that people couldn't clip the coins down, because they would then try and obviously inflate the amount by taking away more of the precious metal that made them valuable in the first place. I'm going to insert a clip from my first ever video on the Romans and their coin clipping antics that led to obviously the value of the gold coins that they used becoming less and less viable as legal tender.
They started off with the Aureus coin, which was 8 grams of gold. They clipped it down to 7.2 to increase the money supply. Then came the Caracalla coin, 7.2 grams of gold, clipped down to 6.5 grams of gold. Then the Diocletian coin, clipped from 6.5 grams of gold to 5.5 grams of gold. Then the Solidius coin, clipped from 5.5 grams of gold to 4.5 grams of gold. However, it did serve as the longest standing currency ever, thousands of years. You can see the issue. Any central entity with control of the money supply, there's always a temptation to increase it.
Another example is the agri-beads of West Africa, used in this society for transactions. But when the Western Europeans were able to come over, they were able to extort these glass beads because they were able to make them so cheaply and easily in their home countries. They expropriated the actual real wealth and the raw materials that were of value through being able to flood the Western African market with these agri-beads that were once used as a very sustainable and viable transaction unit. They were now worthless because of the ability to inflate them to the point where there is too many of them chasing too few goods, and those too few goods become extremely desirable and important, and therefore the inflation that impacts this society through the amount of new agri-beads led to, again, the demise of this currency. Another really important point about the history of money is if the Federal Reserve can acknowledge that cattle was used as a way of transaction in the past, then it's a way of really seeing that such obscure and extremely bespoke methods were used in different civilizations in order to create a monetary system. Now, the problem with cows is that they don't last the test of time. And when money is broken down into salability of time, space, and also divisibility, you realize that, firstly, cows will just over time erode and die through the fact that they are an organic species. They can't last the test of time. I really want to get very briefly into the bimetallic system that was used when you have the ratio of gold and silver. Now, the reason why this is important is because this system was used for many decades, and it did serve as a way of being able to allow for more sustainability with the money supply. As you back the money with a bimetallic system, a mix of gold and silver, usually 50-1, it allows for you to expand the money supply because silver is a more abundant precious metal rather than just a gold system, which can lead to deflation because gold is a lot more scarce. So when you had that silver as well, it was allowing the system to expand, and it was allowing for interest rates to stay low because money lending was a lot more sustainable. By the mid-20th century, many governments around the world moved away from this bimetallic or just simply metallic backing system to just the fiat system, which was backed by paper and also then enforced by government authorities through violent methods. If you managed to get to this part of the video, like, subscribe, drop a comment down below. The historical context behind money paints the picture for why anything has value. The different methods that societies have used in order to create a unit of account, a ledger, to be able to record transactions is from cattle to metals to different materials to stones. It shows that really anything can be used, but the key characteristic it needs to have is scarcity. The moment that those items are no longer as scarce is the moment that that currency just de-escalates and is no longer viable. So that brings me to Bitcoin. Bitcoin is the first invention that has, as a unit of account, scarcity. It can last the test of time. It can't be replicated. It can't be inflated. It's something that can go across space in minutes. It's something that transacts on the network, so it goes across space and time. You've then got the divisibility, and it can go into the smallest units of 100 millionth of a unit. So I want to go through what is Bitcoin and why is it valuable? And just looking at some of the more up-to-date metrics of how we can look at this immutable network and why it could be something that lasts the test of time and why it's got this growing interest from institutional asset managers, banking, starting to be able to custody Bitcoin for its clients. Why is there this growing demand? And is it going away? So look at the block structure. What this is a series of blocks that are formed from transactions. These transactions are hashed together. And what the hash is that mathematical problem requiring a lot of hash power in order to create that transaction of blocks. The moment that that block is verified, you then build the next block, and that block attaches to the previous one. And you have this ever-growing series of blocks that require so much power, I'll get into that momentarily, to reverse. And the amount of blocks that we currently have is 893,150 blocks. Every 10 minutes, these blocks are building. Now that's important because you can see that as this network grows, the ability to reverse a transaction gets very hard, to the point where the power required is extremely substantial. And I'll go into those numbers very soon. And as this network grows, it becomes immutable. And so the units, the Bitcoin units, become ever more scarce. There is no way of creating more. And so this is the first time in history that we've had any asset that can't be printed, that can't be inflated, that can't be reproduced. And therefore, in that is the value, in that understanding of the historical context of money and what items have been used in the past, mixed with the fact that this is a new invention, a new way of measuring a transaction. You cannot produce more of it. It requires 150 exahashes in order to verify one block on the Bitcoin blockchain network. That requires 1 quintillion hashes for just 1 exahash. 1 exahash is one of the largest ways of measuring hash rate. So it's 1 trillion times more than a megahash. It's 1 quadrillion times more than a kilo hash. So it's very large. 150 exahashes requires so much compute power. Just to put it into perspective, 1 exahash is 1 quintillion hashes per second. A typical personal laptop can perform about 10 megahashes per second. The Bitcoin network is 150 exahashes. One laptop is 10 million megahashes, which means that you would need roughly 15 quadrillion laptops in order to reverse just one transaction, which shows that this network is just growing more and more immutable, which is why it has not been brought down and it has not managed to be destroyed or disrupted by any central government who, to be honest, it would be in their interest in dismantling this network because it actually impacts and threatens their control over the monetary network. Even try and reverse a transaction to create the Genesis block, which is the first ever block that was made, which is where you would actually inflate the supply and go from, instead of there being 21 million coins, you could make it 100 billion Bitcoin. To do that, the processing power required is just too high. Another characteristic of Bitcoin that makes it so valuable, especially to institutional and foreign sovereign wealth funds, is because of its decentralization. There is no single point of failure. There is no counterparty risk. You're not relying on the decisions of one individual CEO to potentially transform the direction of that company. It is extremely decentralized, which means that the nodes spread across the world and they cannot be penetrated individually. You've got 21,092 reachable nodes, which are publicly accessible Bitcoin full nodes. This allows them to relay transactions and create blocks and participate in the blocks. Then you've got the global nodes, 66,380. These nodes are not reachable. They do not accept incoming connections, but still download and validate the blockchain. They are going to participate in the decentralization by validating transactions and blocks independently, but they are more private. So if the understanding of the historical context of money, different items that have been used in the past, and now the new invention of Bitcoin as a potential monetary unit of the future has changed or led to you feeling more informed on why this asset seems to continue to have value, especially the way it's reported, and the different types of corporations, institutions, investor class, countries, governments that are starting to take real interest in this asset, then maybe read the Bitcoin Standard, as that changed and transformed my whole view of how I look at money. And I can't unsee it. It's just too late for me now. I'm too far gone in the way I view value and the way I view money and the way I view how you should save and what you could use as a saving tool for the future. I want to get into how all of this could be relevant. So if you look at the current price of Bitcoin to gold, it's been struggling, but there is this long-standing trend line that it's managed to keep. So this is the monthly trend line, and usually when it hits this trend line, it bounces off and goes north. How you should measure your asset is comparing it to the index, which is what all professional investors and professional traders are trying to beat. They're trying to beat the S&P 500 index, the most varied, diverse amount of companies in one index, which is the 500 biggest companies in the US. So when you have the S&P 500 and you're outpacing that, you know that your asset is definitely going to outperform over the long term, which is what Bitcoin is showing it's doing. I really wanted to just look at this realized cap by profit and loss. You can see when these spikes happen, these are usually at the capitulation points of the bottom. These are usually where the asset has found its bottom because there is so much unrealized loss. And the higher that unrealized loss, the more likely people are to capitulating, which means they're more likely to have sold. And the selling pressure is starting to fade. Is it gone? Probably not. But it's starting to fade. And it takes me to this final thread from the macroeconomic trader, Marty Party, who talks about DeepSeek was the beginning of the decline because the market structures have changed. It costs exponentially less to make more profit with these new technologies, which is what DeepSeek is, which cost way less than they were expected to cost. PE ratios and all of the fundamentals are broken. Stocks are overvalued. The index strategy is over. The Mag 7 are being revalued. Index-based passive investment strategies will bleed off all year. You're not safe sitting in an index-based stock portfolio. You're fully exposed. Pivot before it's too late. If you invested in AI infrastructure, crypto infrastructure, and energy infrastructure, you are prepared. Exit index strategies, you have been warned. Now, this may not play out at all, and it could just be completely sounding the alarm and conspiracy theory, the system is broken, it's too late. I feel that with Bitcoin, there is definitely real value in this asset, just when I think about the historical context. And I do believe that there is some truth in what Marty's saying with the DeepSeek showing that you can undermine potentially the amount of capital expenditure that's required in order to compete with these large tech companies like Google, Microsoft, and NVIDIA providing the tools and the chips for these data centers to be built. I still feel that the value in NVIDIA is extremely high and that the potential of that company is extremely high. But I do believe that there is a change and that there is potentially a shift towards the asset class of crypto and the asset class of Bitcoin in particular. I'll finish off with this quote from Michael Saylor, the most highly convicted Bitcoin investor there is, He holds personally and within his corporation, MicroStrategy, one of the largest positions there is in the world. And his view of Bitcoin just rhymes with the history of money. No company, no country, no creditor, no currency, no competitor, no culture, not even chaos. Bitcoin has no counterparty risk. And I think about some of the investments that I've made when you have a CEO who is publicly in the headlines and it is attacked on a daily basis. It can sometimes impact the fundamentals of what you've invested in, and that can start to become noisy. With Bitcoin, there is no counterparty risk. There is no individual that can make decisions that can determine the direction of this asset. It is just going to continue through its own decentralized methods, and the blocks will just continue to be verified, and this network will grow and become more and more immutable. So I hope you got some value from this video. I hope you managed to understand some of the historical context behind money and why having that foundation can help underpin any conviction you have in getting to know Bitcoin more. So if you got any value from this, like, comment, subscribe, hit the notification bell. All the best. Thank you very much.